Hello and welcome to CMC Markets Weekly Trading Outlook for July the 6th, 2015. My name is Colin Szynski, Chief Market Strategist. This looks like it could be another potentially huge week for trading. We had a lot of volatility to kick off last week. Looks like we could get a lot of volatility to kick off this week, and things could continue right through. It's not all about Greece, although it would sure seem that way from the headlines. And certainly the results of the Greek referendum could have a very significant impact on trading to start the week, but there's a lot of other developments in a lot of other markets that also could have keep trading active and create opportunities for traders on both sides. So we'll start off, though. We will talk about Greece. Greece is holding the referendum on Sunday. Polls heading into the referendum suggest it's pretty much a dead heat, around each side having around 42, 43, 44%, and then about 10 to 15% undecided. So it's hard to see at this point which way this will go, who will come out on top. Will this spark another round of negotiations, and what does it mean? It's hard to say, but certainly it depends from the minute to minute. Sides have been contradicting each other, contradicting themselves. There's the IMF has come out and said that Greece needs debt relief, and there's and lots going on. So we could still see a lot of action and a lot of news related to Greece play out over the first few days of the week. Monday, Tuesday, Wednesday. Questions will be, what day does the Greek bank holiday end and Greek stocks return to trading, and also what deal may or may not come out of all of this. But both sides do sound like they are interested, at least in talking, once they see the results of the referendum. So we'll see what happens there, but certainly Greece once again looks to be a big factor in driving trading, particularly to start the week. So we'll begin here with a quick look at European markets. We'll do the DAX here, and what we'll see is that had a big rally to beginning the year. It's come back part way. It had actually retraced about 38% of this gain here off the December lows, and about 50% of the rally up off the October lows. So, and it's now moved into a trading channel here between about 10,800 and 11,650. It's currently sitting here. That's 11,180. That's 11,000. Lower highs do suggest it's still drifting lower. So the DAX could be, as we saw here at the beginning of last week, the DAX could be quite active to kick off the new week once again, and certainly these long shadows tell us that there's potential for some pretty significant intraday swings, particularly to kick off the week. Momentum, however, here has been improving. It actually has been trying to break out of a downtrend in the RSI. So remains to be seen if things look like we do get some sort of stability. You've got a triple bottom here. Perhaps we could get a rebound in the DAX. But if things do go off the rails, there's still the risk of downside. So likely to be an active market. And we'll also take a look here at euro dollar. Euro dollar also shows us that there'd been a pretty steep decline back at the beginning of the year, and it looks to me in a lot of ways that through all these negotiations, the euro's actually been recovering. I suspect a Grexit may already have been priced in by the markets, and so we've had this first wave up here, and now we're just kind of going sideways between this low here is around 108, this is about 110. And this is 112 here and 114. And so there's 108 to 114, lots of Fibonacci levels in between, and we're still working our way in between this. So, but we could see, as we saw here with this big candle here, that we could see some significant volatility on Monday to kick off the week as we get the Greece results. So. That's important. Also, we'll just take a quick look here at a couple of other euro pairs. Euro yen. Euro yen has been actually even climbing up even stronger. Big decline beginning of the year. It's been rallying. It's consolidating here in this 135 to 140.50 range. It is struggling to get back above this. The yen has been starting to strengthen. The RSI has rolled over, gone under 50, turning downward. So we'll see what happens with this one. But if some of the stresses on Europe were to ease and get some sort of deal and move on, then this pair could strengthen a little bit, perhaps retest this Fibonacci here is 137.90, 140.65, and that's the 140 round number right there. And we'll also take a look here at euro pound. which continues to bottom out here, and we'll see what happens with the euro. Again, it looks to me as though something pretty substantial has already been, substantially negative, has already been discounted into the euro relative to the pound as well. But unlike the US dollar and the yen, the euro has not been able to rebound yet against the pound, although it does look like we kind of got a triple bottom in place here. Looks like we've got a pretty good floor here on the RSI around 36, and it's starting to climb up off of it. This looks like a bit of a rounded bottom forming in here, and look at this, you had it smashed one day and came right back. So overall, this is looks as though you're bottoming out here, and you could be gearing up for a rebound or a catch-up rally in euro pound. The other interesting thing before I move on here into other topics is gold. Gold, you would think, as the ultimate one of the defensive havens, would be doing better than it has been. And in fact, gold, even with all this risks swirling about Greece and more money from the ECB and quantitative easing and everything else, and gold's been going down. And so this suggests that the traders are not expecting to see significant contagion or financial turmoil to come out of what's been going on with Greece here. It's broken down through 1170, holding just below it and above about 1164. This low here was about 1156, and this big support level here comes in about 1142. So at this point in time, we watch for gold. We could potentially get a rebound, but it'll be as we are getting a bit of a positive divergence here. We'll see how it goes. Trading bounces initial 1170. If it breaks through that, could be contained by this 1190 or this 12 to 1205 resistance zones. Moving on to my second topic for this week is the Iran talks, where as I sit here, crude oil has been breaking down pretty substantially today. We've had two things happen this week. This was the first week we saw an uptick in U.S. DOE energy inventories. We saw an uptick in U.S. drill rigs, and we have the Iran negotiations going on. The new deadline was moved from the 30th of June to the 7th of July, so things could come to a head in the early part of this week. Certainly by extending deadlines, it means they're still talking. It's always possible they could extend the deadline again, but if progress does manage to be made, it looks as though the street's starting to anticipate a deal. Look at this. We had this huge sell-off in crude, initial rally, breakout here from the ascending triangle, had a good climb on it, and then it's slowly since then been forming a descending triangle above 60. This is for Brent, and steadily declining. Look at this momentum, though, steadily down under 50, and the bottom starting to fall under that. So we've got Brent here has broken 62, it's testing 60. Next support here is about 58, and then about 54.40. So Brent looks like it's rolling over, and also going to show WTI here as well. Same sort of thing. Big rebound in WTI, big resistance here at 61. Look at how many times. 1, 2, 3, 4, 5, 6, 7 times we have shadows that pierce through 61 and we're not able to hold, and also a couple of failures at 61. The support here was in place in and around 57, 56.50. It's now broken that. Look at this, though. First of all, we had this weak, almost not quite a gravestone doji, but it's still not an attractive candle there. You broke down through 56.50, retested as new resistance, and getting slammed again. And all this while the RSI has been pointing downward in momentum as well. Next support, $55 round number, 54.50 is here, and then this 54 area here coincides. Look at that with these shadow tops up here. So crude oil definitely looks like it's under pressure, and this could weigh on the Canadian dollar again this week. I'm going to show US dollar CAD here. Two things about Canadian dollar. First of all is that it could be active off of the oil price. This of course is dollar CAD. So when this goes up, it means US dollar is going up, Canadian dollar is going down. So when the oil price went down, this pair went up because the Canadian dollar went down with it. As oil recovered, this came down as the Canadian dollar recovered. We've now had this weakening, and it's starting to break out again. Upward momentum growing in the RSI, and we're moving up above this resistance here. Look at this. This was 125.25 was resistance. resistance, bang, broken out, has now become new upward support. This is 126, and up here is 128.10. This looks like it's working higher. On top of the oil price, the other thing we have for Canada this week is we have the Canadian jobs on Friday. This is quite significant because it's the last big Canadian data point ahead of the Bank of Canada meeting. Following the recent weakness in the GDP, there's been all kinds of people running around saying, oh my gosh, Canada's in a recession, the Bank of Canada needs to cut interest rates again. And more interestingly, the other one is that when the Bank of Canada cut interest rates in January, they did so a month after Norges Bank. Norges Bank went December, Bank of Canada went January. Norges Bank cut in June. Was that setting up for a Bank of Canada to follow suit and cut rates again in July? We'll see. But because of these factors, the oil price and the employment could keep the Canadian dollar very active right through the week on speculation, ebbs and flows on what the Bank of Canada might do later this month. Now, Canadian Finance Minister Joe Oliver has just come out and said he thinks that Canada will not go into a recession, that will skirt it, will come close but not end up there. So we'll see that as well. Certainly if the Bank of Canada were to not raise interest rates, could be seen as a vote of confidence in the economy. If they did cut interest rates, would be indicative that things have weakened quite substantially. So keep an eye on employment and oil as we work through this week and how it impacts trading in the loonie. The next thing I also wanted to highlight after the Iran talks, Reserve Bank of Australia meeting. So when we're talking about interest rate cuts here, the Bank of Canada is certainly not the only central bank that's been rumored to be cutting rates. The Australian central bank there's also been a lot of talk swirling around them as well as the RBNZ. So the RBA has a meeting this week, and we've seen that the Aussie dollar was consolidating here between about 75.50 and about 78, and bang, it's breaking down again. What happened here? Australian retail sales came in below expectations, heightened talk that perhaps the RBA may have to cut interest rates. They had indicated to the street previously that they felt they were done cutting interest rates, but in the street here is suggesting that perhaps they may be forced to do so again. They're getting pretty close to this 75 cents. This measures down 75.50, 78. Let's call that 78 even is 250. Measures you down closer to 73. If you're looking at this from a technical perspective. The RSI on a rebound faltered short of 50, kept the broader downtrend intact, has rolled down again, confirming that downward pressure is increasing on the Aussie dollar. So two things we look for in at the RBA meeting. First of all is do they cut interest rates or not, or do they hint towards future interest rate cuts? Second thing, do they continue to try to talk the dollar down? Governor Stevens had previously suggested 75 cents as a level they could be comfortable with. Let's see if that changes, if they drop it down towards 70 or something like that, or what happens there. But Aussie dollar could be quite active around the interest rate decision. And on top of Aussie dollar, we could also have Kiwi dollar active because we've had lower milk prices in New Zealand. That's a big export area for them. And there's been lots of talk that the RBNZ may also continue to cut interest rates, which has been driving this. Look at this. This is almost a solid 45-degree downtrend in the Kiwi dollar. It is getting oversold, possibly a possibility for a bounce here. We did have one hammer. It didn't really, but we haven't seen the bounce yet, but the lows of here today have been contained by the lows of this hammer near 66.60. So we will keep an eye on this. We could possibly see a rebound in Kiwi dollar. Depends on what happens with the Australians. Certainly the New Zealand Central Bank, RBNZ, they raised interest rates last year by a full percentage point over the course of the year, 4 increases, and now they have lots of scope to continue cutting should they feel the need. I'll also take a short peek here at Aussie Kiwi because of this, where we've got the Aussie breaking down, Kiwi's looking oversold, and look at this. We've had a massive rally in the Australian dollar relative to the Kiwi dollar, and now look at this. It's starting to roll over. It's not exact. I can't call this an evening star, but it's certainly a rollover pattern. When you had this breakout over 113, that was encouraging. You got up to 114 and stalled. Look at this, spiked up and came down. Bull trap here, gravestone doji, and now look what you had the next day. big engulfing candle downward. So even if you say that this is all consolidation within this other big engulfing pattern, still here the bulls are looking tired. What's the RSI telling us? Negative divergence, a lower high here. You've rolled back under 70, signals upward momentum fading and a correction getting underway. So Aussie Kiwi also looks like it could be starting to reverse course here. First support in around 112.15, and this is around 111.80. A couple of other things that we have going on this week. We have the FOMC minutes coming out on Wednesday, and there was a lot of talk following the last meeting in terms of what was going on with. We had the dot plots, we had the forecasts, we had the press conference, we had the statement, tons of commentary out. Now, since then, we have had a number of Fed members coming out and suggesting that they still think we could get 2 rate cuts this year, possibly as soon as September. What we'll be looking for in the minutes, though, is that the one thing that could impact the Fed's steady march towards rate increases is if something external happens, if there's some kind of shock that stops the Fed dead in their tracks and says, no, you can't raise interest rates right now, you're going to have to wait. So we'd be looking for any kind of talk from that in the minutes. Did they talk about Greece? Well, Greece at least has been in the news, but the one that's kind of popped up since the meeting is Puerto Rico. Puerto Rico's been talking that they may not be able to repay their debts. Greece is more of a European situation. The U.S. is relatively isolated from it. Puerto Rico is right in their backyard, and on top of that, a lot of that debt is owned to the U.S. banks. So if Puerto Rico was to, the U.S. banks and U.S. financial institutions, mutual funds, and things like that, a lot of them have owned a ton of Puerto Rico debt because they have tax-free status in the United States, and it's been a huge investment area, and if this was to go over or go sideways on them, then a lot of U.S. financial institutions could end up with a big problem, and the Fed may have to act to deal with that. So that's something we do have to keep an eye on this week as well. Is Puerto Rico able to pull itself back together, or do they go off the rails? That could also have a big impact. And what we want to know from the minutes is, has the Fed been paying attention to this at all, or is this something that's cropped up and could catch them and everybody else by surprise? So we'll be keeping an eye on that as we go through the week. In terms of U.S. markets, I'm just going to show the S&P here very briefly to show that we're still in this sideways consolidation pattern. We're in 1, 2, 3, 4 months down, 5 months down. I've said this usually lasts 9 to 12 months. So it looks like to me as though, and if we measure back here starting in December, we're 6 months in. So it seems to me as though we're in the middle innings of this game, that this sideways consolidation could persist until the fall sometime. Particularly, of course, July brings earnings season, and then August and September, the 2 weakest months of the year historically for stocks. So we do have some seasonality that suggests the upside could be limited, but at the same time we could be setting up for a strong finish to the year. See what happens. The other thing I wanted to finish off with is China. Chinese markets are still active. There's lots of talk and things going on among Chinese securities regulators, Chinese exchanges, the PBOC, other government parties trying to decide what do they do about their stock markets. Because here's the problem with the Chinese stock markets is you had this massive rally here when the communications links between Hong Kong and Shanghai were improved, and since then we've seen things coming back off. This big rally is all being unwound. Funny, nobody complained when the market was going straight up, but they all seem to be worried when the market comes back down. Anyways, you had the double top peak here on the Hang Seng, was not able to hold really above 28,400. It's working its way down. It's finished the week here back underneath 25,000. Initial support 25,885. And 25,560. Why am I talking China? Because we are starting to move towards the China data. We do get Chinese inflation this week. The retail sales industrial production will be a little later in the month when we also get the GDP report. So we'll probably see people speculating on that as well. So 2 things driving it this week: data, and on top of and the other one is the ongoing market internals, or like the unwinding of this big rally here. So once again, we could see Chinese stocks be quite volatile. I'm talking both Shanghai and Hong Kong and other places. So we could still see a lot of volatility in Chinese markets as well. depending on who says what on any given day. So, as I said, this week starts with Greece. It certainly does not end with Greece. There's a ton of stuff coming out. There's lots of news. There's lots of markets that could be potentially active. There's a potential for a lot of big swings and a lot of intraday moves and reversals, depending on what news comes out and who says what when and what have you. So, it looks to be like another active week for trading.